Hi, everyone, and welcome to this very short session that I'd like to do this evening. It's actually, we're not far off the close of this week's trading session, where I want to have a look at the Twitter chart in particular and look at the price action for this week and some of the background to the price action and also what the price is doing at the moment. But before I start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So I will just take that away. What I've got up here at the moment is actually the monthly chart for Twitter, because what the monthly chart can often tell us and point to, it can give us a sort of a longer term perspective, if you like, of what is going on with the price action and what is potentially going to be going on with the price action. Now, the reason I've chosen Twitter is obviously it's very much in the news with the revelation that Elon Musk has taken a massive, a very large stake in the company. I think it's almost 10%, and I think that qualifies him for a seat on the board. I believe he has bought a total of 48 million shares. Now, I didn't actually make any comment about Twitter until I discovered how he had actually bought these shares, because there was some debate as to whether, well, did he do it in the form of cash secured options, or had he actually bought the shares? And it was when I discovered that he'd actually been buying the shares or accumulating the shares from the 31st of January right up until April the 1st, and that's netted him, as I said, 48 million, and he's paid 176 million for his stake. And I wanted to see, well, how does that relate? You know, what do we see on the chart in terms of the volume, the candle patterns, all those elements of volume price analysis. This was the screenshot and the little thing I put together. This is only on my Twitter feed, so if you want to catch up with the charts that I annotate, that I put on Twitter, then if you follow me on Twitter, just Google, and then you will get access to what I tweet about and what I retweet. But I'm going to take that away because I can talk through the actual chart itself. What I also said, there was another chart that I put up which basically said I wanted to see what the price action, how the price action would end this week, because as we can see very clearly, the price action has actually spiked up to almost $55. There's a ton of volume. This is the monthly chart, but as I said, it's spiked up to 55, and it's actually come off. Let's have a quick look at the weekly, because what the weekly tells us is, here we are, it's got this candle here, nice big up candle, and with a very big wick to the top of the candle, which is telling us that it is that is weakness. There's obviously selling coming in, and it's back at the volume point of control on the weekly chart, as we see here, in the $45 region. And one of the reasons it didn't manage to get beyond the level that it did, is we go back to the monthly chart, is we go back to our important third Camarilla pivot point. I write about pivot points all the time. I do so particularly with reference to Forex on my Forex page on Facebook, but the principles are the same whatever you trade. These third levels, from the resistance or the support levels down here, are hugely important. And on this monthly chart, they are going to be on this chart for certainly for the rest of the month, so the rest of April. So the R3 and the S3, which we can see here, which is really what I want to talk about, and the volume point of control, are actually containing the price for Twitter at the moment. But to return to the monthly chart, as I said, the monthly chart, whether you're a trader or a trader of any, doesn't matter if you trade the 5-minute chart, the 10-minute chart, or an investor, the monthly chart is a really good chart to go and have a look and see what the price action is doing at the moment, and is it at these very significant levels, and are they going to have an impact on, moving forward. Twitter is also a really classic of what I call a pump and dump type stock. If we go right back here over to the left of the chart, where the when we had its IPO back in looks like 2014 here, and what did it start trading at? It was about $70 odd. That would have been a volatility candle. As soon as you see one of those, this is the candle with these little arrows up here, the reaction to that volatility candle, you have a retrace to within of the spread of the candle. So lots of interest, lots of pumping up, and suddenly down it goes. It kind of tried to rally a little bit more, but basically it was pretty much on a downtrend for the next 2 years, and finally found a half decent base all the way down to $15. I always feel so sorry for people who get taken up with the hype around IPOs. Sometimes, Twitter's not the only stock that has suffered from this, and then you suddenly see this sort of slide down until it finds a base. You had a very nice base here, you had a double bottom here, and off it went up again. Loads of volume coming in. You can see over here the kind of the millions of shares that went into it. It's kind of typical tech company. I don't know at the time whether it was actually making any money, but it was, there was tech companies that investors don't always expect to make money at the beginning, but it's for future earnings, as it were. Anyway, that's a discussion for another webinar session. And we can see here the price action is fairly, self-explanatory. It goes into, it tries to rise high. It doesn't get anywhere near the original IPO. It settles, manages to get to $46, $47. We have volatility coming in again, back into a congestion and onwards. And then we have this ramp higher in 2020, when the market started. We had the crash, and then markets really started to take off, with tech pretty much leading the way. And again, we had this ramp up. Great, it went beyond the IPO, original IPO price, but it topped out around just around $80. Again, we had the volatility trigger candle indicator triggered on this candle, and we had a kind of repeat of the price action that we had over here at the IPO. In other words, we had a retrace to within the spread of the candle, and when we have the volatility trigger triggered, the high and the low of the candle also give us very important support and resistance levels. And it's, as I said, great for trading, I have to say. For investment, where is it going to go? We've had, an attempt to rise there, came back. Now we've had another, good news, up it goes again. And we have, as I said, a repeat of what we saw at the IPO. And it trades within the spread of the candle. We can see here for most of 2021. And then when we had this sort of shakiness come into the market, we really start to get a serious sell-off. And we can see here, and once it goes below the low of this candle, it clears the original volatility, and down it starts to go. Now, this is when it starts to get interesting, because it's going down. It's going down on good volume, as we can see here. So, clearly people are sort of, maybe they've thrown in the towel, they're fed up with it, they don't want anything to do with it, and down and down and down it goes. And this is January's candle. Now, January, what happened in January, we saw here, it gets down to this very important third pivot point, and also the volume point of control. And there's, you know, good volume underneath it, but look at the candle. The candle has a deep wick. So we know, even though the price is falling, there is support, there is significant buying coming in at the end of January. At this point, we don't know who's buying, we just know there is buying. So even after, you know, this waterfall with the price falling lower, it's looking a little bit sort of hopeful, as it were. Now we know what's going on in the background. There is actually one person who is, you know, buying these huge amount, you know, blocks of these shares, and the volume that is coming in is above average for what you would expect for a company like Twitter. So that's repeated once, then it's repeated the second time, which is in February. Again, we have a price falls, finds support at the volume point of control, which is what we would expect in most cases. And the month ends with a nice deep wick to the bottom of the candle. And it's repeated again on then in March, and we have exactly the same. So we have three really nice candles for these 3 months with deep wicks at the bottom of the candles. And so we know there's buying coming in. Setting aside, you know, Elon Musk's involvement in this price action, just looking at that combination of candles, looking at the volume underneath it, would be enough for you to say, right, well, as you know, there has been some serious buying, and then, you know, this is going to go higher. It didn't after, I have to say, it didn't go after the first, not necessarily after the second, or even after the third. Now, you could argue, so well, it wasn't until, you know, it was revealed that he had been, you know, he had been buying into the stock, then, you know, it's I mean, all hell broke loose basically, as we can see here. And if we move to the daily chart, we had this massive gap up, and tons more volume came in. Obviously, you know, the news was released, and everybody sort of, you know, piled into the stock. Although, as we can see here, there's a volatility candle. Yes, it did go higher, but, you know, the price has come off, and it's come off, you know, quite significantly. Although you can't, on the daily chart, we can see here the volume has also fallen away, and also down on these down candles. So the situation is, you know, because of these extraordinary circumstances to do with this stock, we really have to give it a little bit more time to settle down. Is first of all to see whether this gap is actually going to be closed. But to get back to the monthly chart, what I'm saying is, yes, we now, you know, we now know why you know, perhaps these wicks to the bottom of these candles, you know, they were given extra. I think you could say he was giving them an extra boost, if you like, because if this was all selling, then this would be, you know, that candle would close as a solid candle. The wicks to the bottom of the candles are confirmation, if you like. There has to be buying in that candle. It's just that, you know, these candles do have their own particular story, unique story, because of the involvement with by Elon Musk. But it's also an example of, when you look at the monthly chart, just see what the candles are doing. Are they at significant levels, support levels? This is, I'm talking about buying now. And the significant levels, from my perspective on my charts, are the volume point of control, the third pivots. So the fourth is also, I would say the third is the most important, the fourth is the second most important, you know, and it keeps hitting this level. It doesn't go through, you know, there's either stopping volume coming in, and then there's buying coming in. You are getting these signals. I wouldn't suggest you go off one signal. I think you sort of wait and, you know, see if that signal is validated. But we had 3 in a row here. So as I said, okay, we all found out it was Elon Musk's, you know, he was involved in this in this price action, in buying the stock at this level. you know, you would say, yeah, that looks like it's, you know, probably going to get a you know, a decent reversal, as it were. So always look at the monthly charts, and you know, just to get a view of if we're coming to the end, particularly at the end of a waterfall. It's not a V-shaped reversal. V-shaped reversals sometimes can, you know, do happen, but they can also, you know, they can be quite fragile. You know, it's almost like a knee-jerk reaction, and then, you know, it doesn't always follow through. Which what we really want to see is this little bit of, you know, it's really a congestion. It's good support, so it gives us more confidence that, you know, if when there is a reversal, then it's going to be steady and it's going to carry on, as it were. It, you know, it's not going to become too volatile, as it were. Now, I don't know there's all sorts of legal stuff going on behind his investment in this company, whether he should have declared it because of the size. Was he out of time? I believe the SEC are involved. So, you know, this story is going to run and run. But from a price action perspective and from a VPA perspective, I just thought it was a lovely example of, you know, this a 3-candle combination with deep wicks to the bottom of the candles, lots of volume underneath it, stopping at significant price-based and volume-based support levels, all adding, you know, to the confidence that it would give us if this was, you know, a stock or any other instrument that you were thinking of either trading or investing in. And I have to say, I use these indicators because David and I have developed them for ourselves, and they kind of fit in with the volume price analysis methodology, and you can find the details of the indicators, and you can watch videos about them at quantumtrading.com. These are the NinjaTrader ones. If you click on the NinjaTrader and you go on to, let's have a look. I mean, I've got the Camarilla levels here. They're all here. They've all got a whole bunch of videos that explains in a little bit more detail how they were developed, what they do, what they will do for you, and just generally on how to use them. But you may use a Fibonacci, you may use moving averages, there are lots of other ways of marking on your charts these important levels of support and resistance. That's what I wanted to say about Twitter. As I said, the weekly chart is the one that I also featured. Now, yes, we know why that's come off in terms of support resistance levels, because we saw it on the monthly chart. And as always, support and resistance levels on the slower time frames do carry more weight. They are, you know, even if you trade on the faster time frames, you should always be aware of these levels that appear on these slower time frames, because I almost guarantee you that's where the price action will stop. The slower time frames, they carry more authority, if you like. Now, what's interesting on this weekly chart is we do have the support of the volume point of control, as I said, in the $45 region. So that also is going to, you know, help the price action. And as I said, we do have this gap. And yes, we've had a lot of volume coming in there. We do have this wick to the top of the candle. It is a weak candle, but you read it together with, as I said, with the support and resistance. And I just want to leave you looking at monthly charts and looking at volume, just to see, really to put maybe charts on a kind of watch list using the monthly. And I've got here just a couple. This is probably more more in keeping of what to look for when you are waiting for really a stock, particularly a stock, to break out. And we've talked about it in other sessions, which is what we call this kind of saucer pattern. This is much more typical. Twitter was very particular in that in those 3 monthly candles were formed in that way. We kind of know why that was the case. So you have this sort of nice saucer shape around but as I said, I've got the VPOC here. You can see here, you've got a lot of volume coming in. Nothing seems to be moving. You can see here, that's the very compressed candle with a ton of volume underneath it. You say, well, you know, it is anomalous, but you could also argue that it is supporting. Yes, it hasn't, you know, yes, it pushed the price up on the next candle, but there wasn't a lot of volume underneath it. What you get is this kind of drift, if you like, but at the same time, what's going on in the background is this large volume that's going in, and what we're waiting for is we're waiting for the point where we do start to get the break and we have a big ramp up of volume. Now we've had this is actually Southwest Energy, and as I said, it has had a volatility trigger. So expectation is this month maybe it's going to go back into the spread of the candle of this the price action this month may go back into the spread of last month's candle. We will have to wait and see, but it's just a nice stock with this sort of pattern, with this sort of volume, to kind of put on a watch list if you are thinking of maybe, you know, trading in this. And it's it's $8 at the moment. It's actually fallen from a high of 50. I suppose you could say it's one of our fallen angel. This is an energy stock. The energy sector has been doing really well. Not the best performing stock in the energy sector by any stretch of the imagination, but certainly maybe one to watch. And another similar one is this stock here, which is a utility, and the utility ETF is also doing extremely well at the moment. Utilities always do well when the markets are, there's a threat of inflation. They're very solid stocks of the word that, you know, people still have to pay for their energy. So, you know, the money is always still going to be rolling in. They're not terribly exciting, not terribly sexy, but they are very reliable. And another one that has fallen, you know, a long way from $70, and it's back down to 10. We've got the same sort of, not quite a saucer shape, it's just been around the volume point of control. And you know, you can look at something like the utility stock. You can go and check out how it's doing against its peers in the utility sector, but you can look at the utility sector itself, which is the XLU, and this is what it's telling us. This is the ETF for it, and you can see it's actually been going up you know, very strongly as markets become more nervous, as the inflation narrative starts to take off. This is when you would expect big money to start rotating out of you know, growth stocks that are perhaps a little bit more risky, and into more solid, some people would say boring stocks, as it were, defensive stocks, of which utilities would fall into that category. Right, I'm just going to stop there. If you do subscribe, do hit the subscribe button. I always forget to say this, do hit the subscribe button at the bottom of this video, so you'll get notified when new videos, you know, when I do new videos and upload them onto this channel. As I said, if you follow me on Twitter, that's where I tend to put my annotated charts. If you're into Forex, then I have the Forex page over on Facebook. And finally, you can actually catch up with pretty much everything that I get involved with in terms of analysis on my own site, which is annacooling.com, and you can see here my last post was actually on the oil price, which is actually at a very interesting point at the moment, and you can catch up. And it also pulls up the posts that I put up on Facebook. I don't think it puts my Twitter. I think my Twitter feed is down there. But anyway, so thank you so much for taking the time to watch this video. I hope you've enjoyed it. Have a great weekend, and I will catch you next time.